Good morning. It's Monday, May 27th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So we sent out a special exclusive technical update in the copper market as well as the S&P 500 in the Blue Line Research portal. You could register for portal access in the link in the description below. Also, we continue to expand on the chart pack, which should serve as a roadmap for you in your futures trading. You can also use the link below in the description to register for that. So checking out on the US equity market, some of the top headlines, things like that. So a lot of these markets are making sizable moves here, and oftentimes we see this after lower volume type of sessions like last Friday, and then muted sessions like we saw on Monday. So a lot of traders here, we start to see some price action that tends to overextend either to the upside or downside in some of these markets. Also, there was very few headlines coming out, but some of the headlines that did make it to the surface here really rattled some of the markets. So you do have the S&P 500 futures up about 1.5%, indicating this massive rebound here after testing last week's critical level of support. We outlined that in the chart pack. There is a gap on the daily chart in the S&P 500 where you come into that Friday where we saw a negotiation occur and a pause on the tariffs with China, and that's where the market had gapped higher. That should act as your critical level of support. If the market does break down into that level just below 57.50, oftentimes these gaps are filled. So just be aware of that. If you're intraday trading and we start to probe into the gap and you're on the long side, perhaps you might have to weather a storm down to filling that gap, and a close below the gap could open up some pressure for additional selling. So just be note of that. So it was the turnaround here, and that was what we were expecting, is that Trump would walk back some of the tariff talk that we saw on Friday. On Friday, Trump had said that the tariffs on EU goods would go up to 50% as of June 1st, and that sparked that market sell-off. And then on Sunday, he delayed those tariffs here to July 9th here to the original deadline under the 90-day pause. We got some follow through to the rally here after Japan indicated it's considering a reduction in bond issuance, prompting some investors to bet on alternative dollar denominated assets. So we saw the yield on the 10-year treasury and also the 30-year here fall about several basis points, moving back below the 5%. You got the dollar index up about 0.5% here. So the currency is set on track for one of its biggest gains here in a week. So the dollar index 99.32 last. You do have the British pound that's also pushing to the upside. That's been one of the better performing currencies out there, and a lot of pressure across the board in everything else. Now you look at the metals markets here, gold under some significant pressure here, down about 2%, trading at 33.23. So what we highlighted is there's a couple scenarios that could play out in this gold market from a technical standpoint here. Check the emotions at the door, check the fundamentals at the door. Citigroup came out and said it's a perfect world for the gold market. It should be $3,500, $3,600. So they are writing a lot about the fundamentals. We oftentimes want to cast those aside, look at the technicals, and it's either setting up for two things. Either you're seeing a series of lower highs on the charts and the market is probing some lower lows. So it's trapped in this giant bull flag. Now, bull flags, the problems that you have is that it indicates like it's going to break out to the upside and extend its gains higher, but what ends up happening is it trades back down to the lower end of the range because of the swing traders coming into the market. So if you look here, we ran into about that 33.50. That's a resistance point that we outlined, and now we're starting to back off here, retesting some of these lower levels, breaking through the 3,300 mark here and trade down to 32.94. So if you're still in the June contract and you're looking at reestablishing any positions, go to the August contract. We also have a few other things coming out here. We've got obviously the improving U.S.-European Union trade negotiations, whether or not they're just kicking the can down the curb, they're stalling, things like that. Trump walking back some of that hard stance is what did put some pressure on the gold market. Now, we saw gold futures surge about $65 when he changed and he threatened them. So you're seeing that it's a lot of gyrations based on trade talk discussions here between Trump and a number of different countries. The other thing you do have is you got Swiss imports of gold were down 31% in April. You have option expiration in June. Oftentimes we see the market make a big move in one direction or the other, and as a result of that, the markets, they are pushed below certain strike prices and things like that to have things expire worthless. Now, we are also seeing a spillover effect in the silver market, which was holding up really well. And the same thing with the copper market as well, breaking out to the upside. Copper tested 488. Silver got back over on the July contract about 33.75-ish and hitting some of these resistance numbers. The September silver got back over $34. Many people were working some good till cancel sells and filling some of those orders here overnight and throughout the overnight session here. That's why it's important to have a futures trading account where you can balance and manage some of these risks, work some targets, and that'll be working for you about 23 hours a day. Whereas on the ETF side or on the miner side, you got to wait for the market to open, and oftentimes, you know, if you look at the overnight session, you're just going to get frustrated. So if you like to open up a futures account, you could also test the markets on some of these. They've got very, very small futures contracts now here. Not saying that the risk is any less here. I'm just saying that it would appeal to a wider cast of audience, people that have smaller denominations here to come into the markets with the 1 ounce gold contract, the 10 ounce gold contract, the 1,000 ounce silver, the 2,500 pound copper contract are all great ways to get involved with the futures markets here. Now you are also seeing, and this was the headline that I think that took the copper market a bit lower here, was there was some signs of easing Chinese demand, including lower sales of some key products, and you're seeing some expanding stockpiles. So orders of electrical wiring in China that had declined significantly in the previous month here. So that's a drag on the overall consumption of copper. It's something that they really follow. Also on the ETF flows, you're seeing exchange traded funds. They cut about 12,000 troy ounces of gold holdings in the last trading session, and it brings it down to this year's net purchases of 5 million ounces. So basically what you're seeing is this gold, smaller decreases here, but we're seeing like a liquidation in the ETFs. They're going into other things. They're probably looking at NVIDIA, which reports on Wednesday. They're looking at the silver market, which could be quite explosive here on some kind of industrial economic recovery as we come out of the trade talks and the trade discussions. You're also seeing Bitcoin futures hovering real all-time highs. So it's just a lot of different things out there that are distracting from the gold market, and people are looking at alternative assets to own. Now, on the silver front, silver, they added about 2.75 million troy ounces silver holdings in the previous trading session, bringing this year's net purchases to about 24.4 million ounces. Third straight day of growth here. So 3.4% is the jump on those ETF flows in silver. So that's a big jump there. We'll see if they come and they buy the dip here today on that market. I think a lot of it hinges on copper, hinges on platinum, hinges on these other outside markets here. The S&P 500 back over 5,900. You do have on the gold silver ratio sitting right at about 99.5 to 1. Again, the critical level 97 to 1. I think that that's where we see, if a break below that, we start to see the rotation of the long silver, short gold type of play here, and we see that ratio come down a bit more. But it's more important, if you're going to play the ratios here, to look at true industrial demand. You want to start looking at the silver copper ratio, silver platinum ratio, platinum palladium ratios, things like that, where they're a little bit more closely correlated. Now you look at crude oil futures, crude oil just slightly lower here. You got money managers there continuing to trim some of their positions for the third straight week, and an outside market that is on my radar. So what I'll do on the weekends here is I'll look at different markets, and I usually start off with that CFTC, the Commitment of Traders report, and I look at where are the record short positions, right? So things like wheat, things like where the wheat market was one where we saw some changing fundamentals here, some possibility of stress on the crop in China. They would have to go out in the world market. It would take global stockpiles lower, and you have an extensively short position on there. So what we'll look at is we'll look at call options and call spreads. Many of you did that, and we were able to capitalize on that move. Another market, and this is not a formal recommendation out to the public. These are just things that, ideas that I have in the ideas bucket where I'll start to look at things. Okay, bring it onto the radar. Let's consider this market here as a possibility. And one of them is the soy meal market, because of the fact, just looking at two things. One, record shorts again. So money managers are extensively short. People are extensively short in that market. And then you look at the technicals. So you look at technicals, it's starting to go sideways, and then now it's starting where it's stopping its decline, it goes sideways, and it starts to look like it's channeling upwards for a potential breakout. Once you get a breakout occur, you spark short covering type of rallies. Just like on the cattle, when we saw cattle prices starting to peak, and we saw some news flow on cattle where you get an outside bearish reversal. You get the market to go up, make a higher high, close lower. Then you get a little bit of follow through. And what happens is short sellers come in and the longs liquidate. And that's the type of 1-2 punch you like to see. And then some of the dynamics of the market change. And that's how you can catch some of these bigger moves in different directions here. So again, not a formal recommendation. It's just something that you want to watch and have a tool in your toolbox, which is monitoring volume and also commitment of traders, the way that they are positioned in these different markets. So we'll see how much liquidation goes on in these markets in like silver and copper here, because I'm going to update the chart pack right away. That copper market may come back down into like the 460s, and that would be an area of interest here, down into the 450s, although we've only seen a smaller move down to 458. The Bitcoin market holding right around those record highs here, so it broke through it. Oftentimes what happens is it retests it, and then a market starts to gear up to rally again. So that's a retest back to the scene of the breakout here. You got gold futures again running into lower high on the chart, but it could be a bull flag if it can get some momentum to the upside. All you need is Trump to just say something critical about the tariffs again. And the European Union is going to be a tough one when you're negotiating, because it's like 27 different countries, nations, whatever they call it here now. Again, copper, we went over that. S&P 500, probably going to, many of you working closely with me, have kind of a two-pronged position in the S&P 500. You are long some put options, put spreads, things like that go out to September on the micros as long-term positioning if the entire market unravels. And then you've also got some long futures contracts on the dip, because we feel like Trump makes these comments and he shifts his tune and the market rallies back up. So we'll want to look at that 6,000 level, 59.50 to 6,000 is your critical level of resistance there. You're probably going to need to take some like catalysts like Tesla, like Nvidia, and things like that, some positive economic data in order to get that market sparking higher. So we'll have durable goods, consumer confidence, and one Fed speaker coming out here today. I'll be watching Barkin here at 8:30 on the S&P Open. So stock futures making new highs here in the overnight session, continuing to extend gains. Gold down 75 bucks, silver down 60 cents. So that's it. There's your playbook here. We'll dive into some other things here. And I'm going to be putting a lot more videos in the portal that is just exclusive for our clients here, breaking down some really good, different trade strategies, ideas, some tutorials on some setups, and then also in the chart pack as well. So be sure to register for that. You got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.